You work, you get paid, the money hits your account. Simple story, comforting story. It's also incomplete, because the uncomfortable question is this: is that money really yours? Not did you earn it, you did. The question is, who actually controls it once it exists? Here's the part nobody tells you. The moment your salary lands in your bank account, it stops being cash. It becomes a promise, a number on a screen, an IOU. Legally, that money is no longer sitting in a vault with your name on it. It's on the bank's balance sheet. They owe it to you, and they immediately use it. That's not a conspiracy, that's the system. Why does this matter now? Because more people are working harder, earning more on paper, and feeling poorer in real life. Savings don't feel safe. Inflation keeps nibbling. Banks keep wobbling. Governments keep borrowing. So let's slow this down and strip it to basics. When you deposit money in a bank, you think you're storing it. What you're actually doing is lending it. The bank takes your deposit and lends most of it to someone else, a home buyer, a company, the government. They keep only a small fraction ready for withdrawals. The rest is out in the economy, multiplying. This is how money grows. It's also how risk spreads. So whose money is it right now? Not fully yours, not fully the bank's. It exists in between. You have access, they have control. Now let's zoom out. Who decides how much money exists in the first place? Not your employer, not your bank. Central banks. They set interest rates. They decide how easy borrowing should be. They decide whether new money enters the system or gets pulled out. When rates are low, money is everywhere. Loans are cheap. Assets inflate. When rates rise, money disappears. Credit tightens. Things break. Your paycheck doesn't change instantly, but what it can buy does. This is where the quiet math gets uncomfortable. Inflation isn't just prices going up, it's purchasing power going down. If your salary grows by 5%, but prices grow by 7%, you didn't get richer, you moved backward. No theft happened, no crime, just math. And here's the irony. You're told to save, but saving cash during inflation is like holding ice in the sun. The number stays the same, the value melts. So who benefits? Borrowers with assets, governments with debt, institutions closest to newly created money. Who feels it last? Wage earners, savers, people paid after the system has already adjusted. This has a name, it's just rarely said out loud. Now let's talk about ownership again. Can you take all your money out today? Technically, yes. Practically, no. If everyone tried, the system would freeze, banks would close, limits would appear. Not because your money's gone, but because it was never just sitting there. It was always working for someone else. This doesn't mean banks are evil or that money is fake. It means money is a shared system built on trust, held together by timing. As long as not everyone asks for it at once, it works beautifully, until it doesn't. Here's where hype meets reality. We're told money equals freedom, independence, control. But modern money is mostly permission-based. Permission to spend, permission to transfer, permission to access. Accounts can be frozen, transactions flagged, currencies devalued. Not often, but enough to matter. So who really owns the money you earn? You own the claim, the system owns the structure, and that structure decides how powerful your money actually is. Zoom out even further. Entire countries operate the same way you do. They earn, they borrow, they roll over debt. When confidence holds, it's stable. When confidence cracks, everything reprices overnight. Currencies fall, savings shrink, history resets. That's why this isn't just personal finance, it's power. Money isn't just a reward for work, it's a coordination tool. And the closer you are to the source of money creation, the more control you have over outcomes. The further away you are, the more you absorb the consequences. So what do you do with this? Not panic, not slogans, just clarity. Understand that earning money and controlling money are different things, that numbers can lie quietly, that systems don't care about effort, only rules. Your paycheck is real, your work matters, but ownership today is layered, conditional, and fragile. Which leads to the final question. In a world where money is borrowed into existence, stored as promises, and managed by systems bigger than any individual, what does it actually mean to own what you earn?